Binance is on the move, and unlike many of the recent rallies we've seen across crypto, this one is happening exactly where we expected buyers to step in. For those of you who follow our analysis, we had already identified a Fibonacci support zone between $625.95 and $627.32. And 2 days ago, on 28th May 2026, Binance did exactly what we were looking for. Price dropped into that support region, it tested it, it respected it, and today, on 30th May 2026, buyers are responding with force. The trading day is not yet complete and nothing is ever certain in the market, but as we open the New York session, Binance is producing a strong bullish engulfing candle and showing signs that buyers are prepared to fight for control. So, does this mean Binance is finally ready to break higher? Or is this simply another rally that eventually runs out of steam? Let's dig deeper. The reason this move matters is because Binance was already showing signs of strength before the recent pullback. Back on 29th April, the market formed a low at $6.10.55, just above another Fibonacci zone we had identified between 603 and 606. What followed was a strong rally higher, and at the time, it looked like Binance was beginning a much larger recovery. Then, global macro conditions changed. Selling pressure hit not only Binance, but much of the cryptocurrency market. And just like many other assets, Binance rolled over. But unlike many traders, we already had a roadmap. We knew exactly where we wanted to see buyers appear. And that brings us back to the Fibonacci support zone between $625.95 and $627.32. The fact that price has respected that region tells us something important. The bulls may still have unfinished business. The recent pullback has not damaged the broader structure. In fact, today's reaction suggests buyers are still defending the market. Before we go any further, if you enjoy this style of structured crypto trading analysis, subscribe to Crypto Trading Mastery. We publish these daily market structure breakdowns every day and help traders identify the key levels that matter before the move happens. Because while today's bullish reaction looks impressive, the real test for Binance still lies ahead. Let's zoom out and look at the bigger picture. The first thing that stands out is that Binance is not yet in expansion mode. The monthly ranges tell us that clearly. The last three monthly ranges measure $89.89, $83.24, and $75.13. Each one is getting smaller. That tells us volatility is contracting, the market is compressing, and compression cannot last forever. Eventually, it resolves with a directional move. The question is, which direction? The answer may lie in the highs. The March high came in at $686.99. The May high came in at $689.99. Yes, price technically pushed higher, but there was very little follow-through. And when a market breaks a previous high but immediately reverses lower, it can often be a sign of exhaustion. That is why the recent decline was so important. It forced Binance back into support and gave us an opportunity to see whether buyers were still willing to defend the structure. So far, the answer appears to be yes. That means the March and May highs become immediate upside targets, and if today's bullish momentum continues, those highs may soon come under pressure. However, they are not the biggest challenge. The real battle sits much higher. The February high on 1st February at $7.89 continues to dominate the chart. At the time of this recording, Binance is trading around $674.53. So while today's move looks encouraging, there is still significant work for the bulls to do. The good news is that if Binance can break above the March and May highs, the move higher could happen surprisingly quickly. The reason is simple. The decline created a volume gap on the way down, and areas with little historical volume often allow price to move much faster once momentum returns. What's more, even though Binance appears to be moving sideways, the market is quietly building constructive structure underneath the surface. The lows formed on 12th April, 30th April, and most recently 28th May. The highs formed on 8th May, 22nd May, and the current high on 15th May. In other words, buyers continue defending important lows while repeatedly challenging resistance overhead. The structure is there. What bulls need now is momentum. As with many cryptocurrency charts, February continues casting a long shadow over price action. For nearly 4 months, it has controlled the market, and that is why the midpoint of February's range remains such an important level. And by the way, if you're finding this analysis useful, we also publish a free daily crypto trading newsletter. It's a quick 5-minute read covering Bitcoin, altcoins, and the key market structures we're watching. You'll find the link above and in the description. Now, let's continue, because this February midpoint may play a critical role in determining whether Binance can build enough momentum to challenge the dominant range high. The structure is already pointing in the right direction. If Binance can reclaim control of that midpoint, it significantly improves the odds of a stronger push higher. On the downside, failure to reclaim the midpoint combined with a break below the 30th April low would be a clear warning sign that buyers are losing control. As we approach the end of May, monthly closes become increasingly important. Strong closes near the highs often signal follow-through momentum, and Binance has already shown impressive strength by bouncing from the higher Fibonacci support zone we identified. Today's price action is encouraging. The March and May highs remain our immediate upside landmarks. The 30th April low remains our key downside level. And if buyers can continue building momentum, a challenge of the February high at $789 becomes a very realistic possibility. To achieve that, we would want to see strong bullish candles, closes above recent highs, and evidence that momentum is accelerating rather than fading. One final observation. On the Ichimoku chart, Binance is currently bouncing from support. And interestingly, both the 2025 and 2026 anchored VWAPs sit significantly higher. In situations like this, those levels can sometimes act like magnets, drawing price toward them over time. Whether that happens remains to be seen, but one thing is certain: Binance has successfully defended a key Fibonacci support zone, and after weeks of compression, the market may finally be preparing for a much larger move. We will see in the coming weeks if the bulls can finish the job. We hope this video has helped you. Before you go, join our free daily crypto trading newsletter. It's a just 5-minute read, and it'll keep you ahead of what's moving in the market. The link is above and in the description. If you found this analysis useful, subscribe to Crypto Trading Mastery and hit the notification bell so you don't miss our next daily video. Thanks for watching, and we'll see you in the next one.